right, good morning, traders, and welcome to the opening bell. Today is Friday, May 15th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to wrap up the week with you guys. Happy Friday. We're seeing some fireworks into the close of the week. So President Trump is on the way back from China. There weren't many deliverables from this trip. I think the markets are a little bit disappointed. You saw a little bit of a mention we talked about yesterday about the Taiwan issue. There were some other gives or deliverables in that they were able to up their purchases of Boeing jets. At the end of the day, there doesn't seem to be much of what's the word I want to say? Much fruit out of it. And we're taking a little bit of a step back. You're seeing that the US dollar is trading higher. Stocks are trading lower after a major, crazy ripping rally. Treasury prices are down. Yields are surging. Oil prices moving higher. Gold moving into support. So we got a large swath of assets to cover. We'll go over all of those and more. Any questions or trade setups, feel free to throw them on the message board. We'll be getting started in just a second. All right, great to be with you guys all this morning. Hey, Ashish, Dale, Frank's in the house, Yana, JP, Latanya's in the house, Pamela, great to see everyone this morning. So here's DXY and the breakout. So we've been mentioning 98.68, 98.78. That was the resistance zone. First was the 200-day moving average. Both of these we were looking since the start of the week on that breakout of the late March downtrend. Here's the break yesterday. Okay, so the accelerated push now testing the first lateral level, which was 99.18. Note that this was the gap lower. That was actually the swing high. This was like a fat-fingered Sunday open. You don't actually see this represented on all different price feeds. But at the end of the day, that's the lateral level I'm looking at. That's basically what we're trying to break now. The next major key level comes in at 99.50. And this is a level we've been talking about for a while. It's the 618 retracement of the decline off the yearly high. It's also the objective January swing high. Not Mike Boutros' opinion, not FOREX.com's opinion. Fact. It's also the gap fill. So if we're going to fill that gap from the April downside break, you'd want to see it pop into 99.50. All of those converge on the same exact lateral level. So if this breakout is legit, it was confirmed yesterday with that close above 98.78, you're basically looking higher while above that level. The bottom end of that zone is 98.68. Top end is 98.78. That's now near-term support. If you breach, you close, you push through on an extended push through US trade here through 99.18. The next major pivot is 99.50. The actual gap close, just to give you the exact level, is 99.52. Okay, so just for reference's sake. But this is big. This is big. You look at this on a weekly standpoint. Here's the weekly chart. Big old reversal taking us back through the 52-week moving average for the first time since back here in April. There's that lateral level. Okay. So coming up on big resistance, just a bit higher. You are testing initial short-term resistance right now. If DXY is heading higher on this stretch, 98.68, we need to hold any pullbacks on support. Next level up, 99.50. Look for a larger reaction there. Above 99.50, there's room for a major stretch towards 100, spot 15, 100, spot 35. Remember, this was key resistance. We were talking about it for months on the rally. The lows from 2024, the close low from 2024, the pivot here from the July high, the November highs, all stacked up right here. So the levels are very well mapped out on both sides of the trade. For the bears to reassert control, you'd essentially need to, this is bullish inval near term, but for the bears to reassert control, you basically want to see that 200-day moving average break. That's 98.50, 100 pips away. Push through the yearly open would basically open up the downside, but the levels are pretty clear here. Not quite back from overbought territory yet. So not a trade I want to try to fade or get queued on, but certainly testing near-term resistance here on the DXY. Here's what Euro looks like. Major breakdown. That one broke not only key support, and the level we've been talking about is 1667 into 1681, 38.2 off the yearly low, swing high from back here in March. I had the 200-day moving average right there as well, and the monthly opening range low. So that right there validates a break of the monthly opening range, it basically suggests to look for a late May low. So what does that mean for us on the near term? Well, here's what that same slope, I'm not sure if I showed you this, if I added this yesterday afternoon or in the webinar. Have you guys seen this slope before? This is a basic modified pitchfork off the high. It's been really clean. Break the median line yesterday. There's the downside drop, accelerated move. Lower parallel converges on the 100% extension off the high. 1, 2, 3. I'll be putting a piece out, by the way, on FOREX.com later today. So it's going to have this exact setup. Hey, good morning, E-Man. Great to see you as well. So the next downside level, 16 proper, is 2 equal legs off the high. The January low close, okay, comes in at 16 proper, essentially 1599, 1598. And then just a bit lower is the 618 of the rally from March. I'm not sure. I didn't want to shade this whole region and put like a 20 pip, 25 pip zone of support. But the whole zone is important. The whole zone is important. So below 1578 is what you would need to get the next major downside thrust. From here, this decline, you are testing those highs from back here in April, but the next major lateral level is basically right at 16 proper, 1599 or 1598 rather, January low, 2 equal legs off the high, just a bit lower. Remember, I showed you this chart yesterday, right? We just came off of major lateral resistance, huge, huge zone. We've been testing it for what, 6 weeks now? Here's what the close looks like, right? That's the 618 of the slope of the decline. Caught the lows perfectly, caught the highs perfectly, way too freakishly clean, but there it is. So a little bit lower, you start to come into a little bit more of a significant support level, but 16 into 1578 is going to be critical. Now, here's the 4-hour chart. If we're heading lower on this stretch, rallies need to be limited by 1681. That's now the 200-day moving average, the 38-2 retracement. Again, the median line is right in there. That needs to hold resistance if we're heading lower on this stretch. Broader bearish invalidation, the level that would put the bulls back into play and basically suggest potential resumption towards 18, is this pop into 1730, into 1745. This is the objective monthly open and the objective yearly open, not Mike Boutros' opinion, not FOREX.com's opinion, fact. So again, another dollar major where the levels are just super clean on the near term, looking for inflection, looking for a reaction on a drop into 16. If you're holding short exposure, like that's a level to start reducing position size, potentially lowering protective stops, getting a little bit more defensive. New exposure, you're looking for reaction off 116. Rallies would need to hold 1680 for heading lower. As always, my humble interpretation of the technicals, guys, not a trade recommendation from FOREX.com or Stonex. Okay, mud on. Sterling's at confluence support. So we cracked this one early in the week, right? After that break, we were like, if that is a break of the late March uptrend, well, then the Thursday low should hold 35.47 resistance. It's exactly what happened on Tuesday. We ran into it. Thursday's low was resistance. We pushed lower. The major support barrier we were talking about was 34.65 into 34.73. That's the February low day close and the yearly open. Both of them converged on the median line. What does that mean to us? Well, those are our butter spots, guys. Like when you see major lateral support or resistance, which is objective, converging on slope, which is subjective, that's where you look to get validation of your analysis. If this was going to hold, I'd want to see a stronger reversal, a stronger recovery. If it's going to break, I want to see a drop, a stern sell-off. It's exactly what you got. The drop broke. We didn't even pause at the 200-day moving average, which was the first level of support. And then the second one is being tested right now, 33.50. This is critical. This is the 618 of the rally off the low, and it's downtrend support. So I'm looking for reaction, the British pound right here, right now. Whereas Euro has a little bit more room to go before you hit 116, Sterling's right at confluence support as we speak. So I'm looking for inflection here. If we're heading lower on this stretch, initial resistance, look at the 200-day moving average. That's somewhere near 34.25. But really, like, you need to see any rallies limited by that yearly open. And it's a ways away from where we are right now. It's all the way up at 34.73 now. It seems like a while since we've been there, but it was just yesterday. That's near-term bearish inval. Okay, downside break below 33.50. There's room, almost another 100 pips before you run into slope support, which is the 786 retracement. Let me show it up here on the weekly chart, or on the daily chart rather. That 786 retracement shows up on slope support right around this zone near 3260s, 3250s. So another 100 pips if this breaks. Watch today's close. We're testing Fibonacci support as we speak. Initial resistance at the 200-day, bearish invalidation at the yearly open, 3474. Next week, we do get employment data out of the UK. We get inflation data out of the UK. So the US docket is pretty quiet, but certainly we'll be looking for those war headlines, and some data coming out of the UK may offer some catalysts here on the British pound. Aussie breaking the weekly range was a beautiful setup with something we've discussed throughout the course of the week. Finally broke 72. Okay, all the way down into 72 proper, into 72.13. You're talking about that major pivot zone. My favorite fib confluences. Here's the weekly chart, 100 off the low, 618 off the high, beautiful zone. We were looking for that to be a major pivot. If we were going to head higher on this advance, that needed to hold, and that would have dissuaded some of the divergence that we were getting into that high. Here's the result, right? Here's the pullback right now. So the focus for the last couple of days has been a very tidy weekly opening range. Tried to give out on Wednesday, couldn't even get a 4-hour close, finally broke. Thursday break of the weekly opening range, a little bit late in the week, but you're looking for a late Friday low. It's Friday. First level of support upcoming here at 71.36. That's going to be the objective swing high from August of 2022, near the highs of 2023. Converges right here. All right, this is what it looks like on the weekly chart. Here's what it looks like on the daily chart. And here's what it looks like on the 4-hour chart. Just lower is the 38.2 of the advanced 71.08. So both levels I'm looking for, potential inflection, more so 71.08, but 71.36 has been sort of a thorn in the side here of Aussie for a while on the way up this year. So I just do want to keep that in mind, that swing high from late 2022. First level, second level. Near-term slope, this is just a real near-term structure off the lows from March. There's the median line break, was right there as well. It was one of the reasons this was one of our favorite setups for a weekly opening range break. First two levels upcoming. Watch for a larger reaction at 71. If 71 gives out, you're threatening a much larger setback within the uptrend. The 618 of the rally, just off the low from March, gives you 70 proper. It's like another 100 pips. So I am cognizant of that. There was some swing lows there from last month. That's my first level. I'm looking for a little bit more of a significant reaction in price. Initial resistance right now back at 72 into 72.13. Same zone of support. Weekly opening range lows. Monthly open, right? All of that jazz right there. That's now resistance. Key resistance still 73 proper. That doesn't change. We do get updates on employment out of the Australian market as well next week. So some event risk there might be offered as well. Questions on Aussie? Pretty clean. Now, unlike Aussie, which gave us the break and the run, dollar CAD was testing resistance yesterday, and we were talking about this level for the last 2 days. It's broken, but we haven't, well, it's starting to follow through now. Here's what it looks like. The level you guys all hear before, 37.33, 37.26, or 37.22, I always forget. That's the September lows, the August lows from last year, this year's yearly open, the 38.2 of the drop off the November high, all of it. Even the February swing highs, all of it are right here. Now, yesterday was the third day that we were trying to break it. We didn't do it on the close. Here we are trying to pop through. Note that we haven't marked a daily close above it. But if this is legit, any pullback should be limited to like 37.25, 37.26. Okay. The next level up, there's room. There's not any major lateral levels that come into play until 38.08. Just above that is the 200-day moving average at 38.13. So both of those converge on the 75% parallel, basically into the start of next week. That's your next upside shot level of resistance on dollar CAD. If this breakout is legit today, any pullbacks need to be limited to 37.20, 37.26. Okay, bullish invalidation. For the bears to reassert control, you would need to break back below the objective weekly open. That converges on uptrend support right near 37.13. 36.77. Make sense? If the breakout's legit, limit loss should be 37.26, but the bullish inval level from a technical standpoint is 36.77. Next level up resistance 38.08 into 38.13. Look for a larger reaction there if reached. Big zone. Questions on dollar CAD. CPI data on tap next week out of Canada. Watch the weekly close here. This is pretty big. Also note on the weekly chart, I knew there was something else I wanted to put on this. The 52-week moving average, guys, comes in at 37.88. So just ahead of the 38 handle. 37.88 is like right around here. Potentially on the weekly chart might offer some kickback, but all things held constant, you got to maintain 37.25. You got to maintain 37.25. Okay. Questions, comments on dollar CAD? All right, yen. Okay. So the bulls are testing the resolve of Japanese officials. Here's that pop through resistance. Maybe this is my fault just because I have such a bias on this trade. It's really not fair. But at the end of the day, this is now attempting to make a fifth consecutive daily advance. The pivot through that 57.40 level, 57.70 level. I was telling you how uncertain I was about that. Well, we broke through it on a really ugly fashion, but we tested it as support twice. So technically this should have been the nail in the coffin that really asserts, hey, it was right after the webinar yesterday. Hey, actually, we did just break that, and we even tested it as a support. So look, now you're at a major resistance level. This is the April low day close. Well, I have to change that heading. It wasn't the April low day close because we registered that in the last day of the market. But the April 17th swing low, the close of that session is right on the monthly open. So the April open, that low day close from the 17th, both of those levels converge right here at 58.64. Looking for reaction here. If you get the pop, yeah, you're in an uptrend. Still something I can't get excited about it, but that's the implications, right? And in fact, if you take a retracement right off the high, I had this on earlier, but it gets kind of messy. This is the 618. So you're even breaking like any basic objective measure of a retracement. So look, if you were playing the long side, good on you. Well done. Look for something here. Look for a potential reaction here. Might be a good area to clean up your plate a little bit. If we break through, I expect there might be another accelerated move since this was the origin of the major breakdown on the back of that Japanese intervention. If we hold, key support comes in right back at that same level that we were talking about, former resistance from last week, 57.40, 57.70. So this is your range of influence right now for dollar yen. Make sense? It's still a blah trade for me. I don't really want to mess with that. Okay, dollar Swiss. Here's Swissy approaching initial resistance or a larger resistance zone. So the region we had highlighted was 78.62 into 78.73. We're there right now. That's the 618 of the drop off the high from that April rally or that rally into the close of last month. It's also the October and November swing lows from last year. Really nice pivot in price and a basic 38.2 retracement of the advance off the early low. All of it converge on downtrend resistance. Looking for reaction here. This is another one yesterday where the breakout kind of lost steam real quick. And you saw some divergence on that. And we were talking in the room and I was saying, I don't know, like I'd want to see that really start to accelerate here. Well, it did. Came right back into the monthly open, held. That's what those dots are. And then perfect thrust. This is now a larger reaction zone. Look for inflection here. If we topside breach 78.75 on a daily close basis, momentum is already in overbought condition. That would suggest a breakout of the late March downtrend. Period. End of paragraph, exclamation point. Right? But all things held constant, the rally is vulnerable near term into 78.75. So plan accordingly if you're involved on dollar Swiss. Questions on Swissy? Approaching major resistance here. All right. Okay. that's everything that I had on the FX front. Before I jump into gold, I just want to take a moment and talk about yields because we're seeing quite a move, guys. And this is part of the backdrop of what we're seeing today. Again, dollar up, stocks down, treasury prices down, yields up, oil up, gold down, right? All of this happening in tandem. Here's what the treasuries, I'm sorry, I didn't bring it up yet. Here's what the treasuries look like. This is the 30-year. Okay, well, let me even start with the 10-year, both of them. So the 10-year broke this week, not only the yearly opening, the yearly high, the yearly opening range high broke in March, but the yearly high broke out here just on this last move. And we're now testing last year's open. We broke through Fibonacci resistance. And this is a basic 2-point slope touch. I don't want to stress it, but we're all right there. We're all right there. Okay. The actual open, excuse me, comes in right there at 457. We're trading right there. Here's the 30-year. Clear cut breakout. 618 extension from the advance off the lows that you made back there in 2024. The high week close from 2023. Cap the advance. The high close from 2025. There it is. All of that converged right there. Remember, this was breaking through the January highs here back in March, but we never confirmed a breakout of the yearly open range. If we close at these levels, this would be a confirmed breakout. 2023 swing high comes in at 518. Can't believe we're talking about that. Right below is the 2025 swing high, which is 515. So clear cut breakout in both of these. Here's the 2 years not really reacting quite as much, but you see that both of those are reacting as the dollar is rallying, and we're seeing this sort of risk off in assets. So looks like dollar wants to make a test at 99.50. Keep an eye on that. All right, gold. Gold was sitting at support at the start of this webinar. Have we broken? No, but we're still there. 44.92, 45.33. Remember, I put out a piece on FOREX.com yesterday. The focus on gold was an objective break of the weekly opening range. We said that break of the March downtrend, if that breakout is legit, losses would need to be limited by 46. Here's a break of the weekly opening range lows, shattering 46. Here's key support. This is a level we've been watching for a while. This is the support that caught last month's low. It's the 2026 low week close. This is the daily chart, so you can see it on the weekly just to get some clarity. There it is, your low week close, and it's also the 2025 high close. So all of this is stacked up right here. Right here. Look for reaction at gold at this zone. If we break below this mark, first of all, this slope will be null and void. Let's just get rid of that. But if we break below this slope, guys, you're looking at like 4,400, like another $100. That's the 618 retracement of the advance off the yearly low and the low day close. So in that kind of scenario, you'd be more wanting to consider something like this. And if you do something like that, where does the median line come into play? Right there. Where does 4,400 come into play? Right here, early next week. Where does initial resistance come into play? Former support, right here. Whoop. Right there. Okay, so amended levels there for gold on this decline, looking for reaction as we're testing support right here, right now. Questions on gold? All right. Last but not least, just a quick look at oil, making a move higher here again. Just wanted to show you that pivot zone, messy as it was, there's the median line support. Here's the pushback. And now we're testing the objective monthly open, which comes right around 106, just below 106. It's like 105. Let me get you the exact level. 105.40. So this is your objective monthly open. We're right there again. We're still in this massive consolidation pattern, subject to any kind of developments or headlines coming out of the Middle East. So take that for what it's worth, guys. But initial resistance right at that 105.40 level. Topside breach, you're looking for 109.67. Initial support, still 101, 101.50. Okay. That's the full suite. As far as Bitcoin is concerned, just for you, man, we're still holding 81,000. So I don't know what to do with this thing. Major resistance level, 2 equal legs off the low. We've been talking about it for the last week and a half. We've been straddling it. but it's still offering some sort of kickback ceiling resistance. So still think the threat is for a kickback off of uptrend resistance, all still within the confines of the February advance. Near-term support, 74,434 into 76,159. This needs to hold if we're heading higher on this stretch. Larger bullish invalidation still at 70,283. Topside break, you're looking for 85,273. That's the 38.2 retracement. Extend that zone to 83,712, but two levels of interest on the upside if this were to break out. I think you're going to get some indecision here, some digestion of that rally off the April low, maybe some further kickback, but still ranging. Yeah, hey man, still ranging. Nope, I won't forget you. I got you covered on this. No worries. All right, 5 minutes to spare. Guys, thanks again for sticking with me every single day of the week. Stay nimble as we wrap up the week here. We're still kind of digesting what, if anything, came out of the China visit for Trump, but the focus now shifts right back to the Strait of Hormuz and developments there on the war efforts. It seems like things have been escalating a little bit over the last couple of days, but we'll see what happens on the back of this. So keep your eyes on the headlines. I'll keep you updated as always on MB Forex. Till then, best of luck trading, guys. Have an awesome weekend. And I'll see you on Monday morning at 8:30 Eastern for a full hour with the weekly technical outlook. And then right back here on the opening bell at 9:30. Till then, best of luck trading, guys. God bless.